terms of some of the tail risks you see in the market, with China's over-leveraged banking system, with growth slowing and the change in central banks around the world, basically saying he just doesn't see a reward of being invested in equities or bonds at the current moment. Cash is a position. What are your thoughts?
Yeah, I mean, if that's the way you think about the world, that's fine. I mean, I could tell you the risks are. I could tell you that the risks aren't what you read on Zero Hedge every day. The risks, according to us, are the ones that we've laid out. So again, we've talked about global divergences. We've talked about emerging market risks. We've talked about the dollar breaking out. These are the big risks that currently matter. If that makes you want to go to cash, have at it. If you don't want to go to cash and you want to buy corn, natural gas, energy stocks, tech stocks, consumer, there's a lot of things that we like, okay? So you don't just have to be in or out, or you can be. It's totally up to you.
Yeah, and I'll add this. Accelerating growth and falling volatility in asset markets cures all. So we talk about 3D risk all the time, debts, deficits, demographics. You can layer on China's banking system, which everyone's obviously been on the wrong side of for the most part for many years now. There's a lot of really bad boogeymen out there, but until growth really starts to slow, and this is the point we made about EM, it wasn't about a rising dollar call. It was that the EM cycle was actually peaking and rolling in growth terms, and you're going to start to expose all these bugaboos like Turkey, like Argentina, that rely on global capital flows to keep their economies running. That's the call in EM, transitioning from Quad 1 for almost 2 years into Quad 3. That was the big call. And obviously you're seeing a lot of follow through in asset markets as a function of that.
Yeah, if you go into the slide deck on our Chinese presentation, slide 93, Genron, you can hit on this pretty quickly. All right, I'm just going to show you something that is absolutely true and aligned with what Darius just said. Because you got a lot of monkeys out there that are talking about Turkey being a one-off, okay? Okay, so this is, these places right here, they're called emerging markets in Asia, okay? These are called rate of change slowdowns, okay? This didn't start happening out of thin air. By the way, this started happening right here. You see what dates are down here? You know where the Trump trade narrative and the trade wars all came in? After that, okay? This isn't about Trump, it's about China slowing, okay? China was already slowing. China is ready to do deals now and appease Trump and his administration, right, because they are slowing. Okay, China is slowing. This is the biggest and most consequential factor in the world today that matters for EM Asia, emerging market Asia, Indonesian exposures, Thai exposures. Again, you go through these things and now you know what you didn't know if you hadn't been subscribing to us 6 months ago. So again, 6 months ago, we started to talk about the probability rising that the world would show as opposed to a globally synchronized recovery looking backwards. Oh yeah, man. Even the Jamaican macro guys, man, crushed it. That is a globally synchronized recovery that included Indonesia, Thailand, South Korea. And this was when Rocket Man was a risk, remember? In South Korea? The economy was ripping in South Korea. Didn't care about Rocket Man. So again, be careful with the macro tourist items. Check them at the door. Laugh, you know, have a beer if it's late in the day. It's 5 o'clock somewhere everywhere. But understand that this is totally doable. You can do this. Do this in rate of change space. These are the things that are happening. This is why we like the dollar, or a big part of why we like the dollar. We don't like, you know, these places and their currencies. Okay, these are the things that have already started to happen, and we would expect they'd continue to happen throughout the year.